Are high interest rates starting to get you down? Looking at these interest rates, 5, 6%, and how it affects your ability to buy a house? Well, stick around and I got some information for you in order to lower the amount you pay in interest, which saves on your monthly payment. Every single day, great folks like you are reaching out to us by phone, text, or email about their housing needs. And if you need any help, you can just go ahead and contact us. Our information is below. So I know by now you know that interest rates have gone up significantly. It's no longer 2.75% or 3% or 3.25%. It's gotten up to over 6% at some points. Fortunately, as of the recording of this video, interest rates have actually fallen down a little bit, and for certain types of loans like the VA loan, it's actually under 5% again. While that is good news, it is far above what it was, and it costs you hundreds of dollars per month just because of that interest rate. So I'm going to go over some tactics and techniques today where you'll be able to hopefully save a little bit of money on your interest rates and long term put more money back into your pocket. So let's go ahead and get to it. So the first and most obvious thing that you have to look at is who is the lender. Now, sometimes you may have a lending friend and it's easy to just look out and go, hey, I'm going to use my friend. Well, let me tell you a quick tale. I actually had a guy one time who wanted to use his friend for a lender. That's great. He helped his friend out. But I really had to bite my tongue because his friend bent him over without any Vaseline. And that's taking it mildly. He threw in so many junk fees, charged origination fees and points and everything else. And I'm serious, it's like $5,000 or $6,000 in extra fees that his friend put in there. So you need to shop around every time you go for a mortgage. And you know what's really interesting that people don't realize? Some people say, hey, I don't want people hitting my credit over and over. Guess what? It doesn't affect you. Changes with the CFPB, Consumer Finance Protection Board, actually made changes where when you are shopping for the same type of loan, it actually does not affect your credit. So as long as you're doing it for the same type of loan in a short period of time, you're not losing anything. The only thing that you have is to gain. In other words, to gain a lower interest rate, because a lot of people don't realize this. Interest rates can vary by as much as 0.75 basis points, also known as just plain 0.75 points, between the various lenders in a town. Wow. That's a lot of money that can go back into your pocket. So that is the first thing you need to do. Get a list of reputable lenders, both the national lenders, you know the ones I'm talking about, the little local guys, the regional guys. Find out what they're actually going to charge you based upon your credit record. Also, if you're doing things like Credit Karma, I'm just going to warn you up front, those scores aren't real. They're not real. What you need to do is actually have the credit scores, the FICO scores that the banks will use, and have those pulled and find out what your credit score really is, so you'll go in it with your eyes wide open. Now, the next thing you need to look at is it doesn't matter what they quote you for an interest rate. What matters is what's known as the APR, the annual percentage rate. And a lot of things go into that, and it includes fees. Now, remember I talked about those junk fees before? Well, a lender can have either high fees, low fees, or in some cases, no fees. So I know lenders who have no fees. And sometimes these fees are not just with that lender. And when I mean lender, I mean the company itself. It's with the individual loan officer. They are allowed to set certain things themselves. So you need to see if that loan officer wants to make a certain amount of money. So the amount they charge in interest and certain other things is based on how much the loan officer wants to make. Believe it or not, kind of like a real estate agent where they set a commission, the loan officer can set a commission. Well, that can be kind of negotiable. So if you go get with a good loan officer, one may want 1.5% in profit, one may want 1% in profit, one may want 0.5% in profit. the one that wants 0.5% in profit is actually going to pass those savings on to you. So that's what you have to look for. Also, what are the other fees that they may charge? One is called the origination fee, which can be up to 1% of the loan value. Well, some lenders charge it, some lenders don't. Let's say you're buying a $500,000 house. That could be $5,000 out of your pocket. Now, some lenders even cap it, maybe at up to $3,000, $3,500. That's great, but what about working with a loan officer or a lender who does not charge that origination fee? That is putting money back in your pocket, and the origination fee can be a major component in your closing cost. The next component are those interest rates that are being quoted based upon no points or points. So it's easy to quote a low rate, but not to tell you up front that you have points to pay. So a point is, let's say, 1 point is equal to 1% of the loan. So if you had a $500,000 loan, we just talked about it before, you have 1 point, $5,000, 1.5 points, $7,500, and so on and so on. Well, what that does is buy down the interest rates. So sometimes a lender may quote a certain interest rate and it looks low, but they didn't tell you that there's 2 or 3 points on that to buy that interest rate down. You really have to look at everything. You have to go beyond that number of, oh, it's 4.75% this week. Great. They didn't tell you about the origination fee, 3 points, all that stuff, in your $500,000 home. You owe $20,000 just in that. That's a lot of money. So there is actually more to the rate sheet than you can actually see. You have to go in there and work with your real estate professional if necessary. Go in there and look at all of the fees that are being charged so you can see what your real cost is. Now, even though rates have come down for this week, they are expected long-term to go up, and there is a cost to waiting. How long have you heard people say, like when New Year's come around, I'm going to join a gym, but I'm not going to go until I get a little buff so I don't look bad in the gym? Well, you got these people who say, I want to improve my credit score so I can get a lower interest rate. Well, can you imagine people who back in January said that, and now no matter what they do, the interest rates they're going to pay are far more than they would have paid. On top of that, a lot of them don't understand that there are certain little things that you can do to improve your credit score to either get you a loan or to get a lower interest rate, but you're doing things in the wrong order. You need to start working with professionals to get your credit score right and in the right order so you don't waste your time. Because let's say that right now, as of this recording, for a VA loan, my favorite, the interest rate is down to 4.75%. Outstanding. What happens if 6 months from now, it's back up to 5.75% and you've been wasting your time? You need to lock in this great interest rate right now, although it doesn't sound great. It's better than when it was 6%. So look at that cost of waiting. The next thing you have to look at is maybe you don't have time to go through all of this. You know, there are actually professionals that help you with that. They're called mortgage brokers. Now, I know some lending folks may go, oh, no. There are actually lots of products out there that even I don't know about. I'm not a lender. I'm talking to you as a real estate agent. If you work with a good mortgage broker, they may be able to find a product that works better for you. That's what you're looking for, the product that works best for you. So what a mortgage broker is they are not a lender. They've gone to the lending school and all that stuff and passed the test. But what they do is they look at all the lenders around the country and locally and find the product that fits best with you. So sometimes you actually can come out better working with a mortgage broker than straight with any kind of a mortgage company because they can negotiate better rates for you. So that is another one to look into to save some money. And they get their money kind of like that loan officer does, because a loan officer, even though they work for the lender, they're commission employees, a lot of them, except for the very big banks. Well, you kind of cut that loan officer out, and that mortgage broker may be working for a smaller sliver, which that smaller sliver of course, puts more money in your pocket because of an interest rate reduction. So look at all of your options. Don't leave anything on the table, because with interest rates the way they are now, it can really cost you. Now the next one, we talked about those points. Well, what about them? What happens if you paid a few points and saved a whole bunch in interest? Can you imagine if you paid a point, $5,000 on a $500,000 house, and it saved you $200 or $300 a month in your monthly payment? How long does it take to get that money back? If you're in that house for 5 or 7 years, you've made that money back in spades. But here's the best part. You can have the seller pay those points. Right now, the housing market is in turmoil, especially here in the Las Vegas area, and in certain areas are starting to see a little bit of softness. Well, in those areas, sellers are starting to come out of pocket some. You know what? It's better to have something now than nothing later. Some of these people, they're hundreds of thousands of dollars ahead, and the smart ones are saying, let's get this deal done. And they can actually pay some of your closing costs and your points. So based on the type of loan that you have, they can pay up to a certain percentage, and then you can get those points and get lower interest rates. In talking about lower interest rates, here's another place to get lower interest rates. New home builds. Here's how that works. The new home builders, they actually work with the lender, and it's under what's known as an MSA. It gets more complicated. Well, the lenders will give better deals. These are the places where you can get your down payment paid for, and a lot of them have bought down the interest rates. Well, they bought that interest rate down for you. That's, again, money in your pocket. So if you have a lower interest rate, you have somebody covering your closing cost. And right now, for the first time in a very long time, new home builders are actually starting to lower their price. First of all, they got rid of the exorbitant lot fees. Remember, those of you who were looking for a house or new home build, those lot fees had gotten up to like $50,000, and there were bids and lotteries and all that crap. That stuff's over with. Lot fees are gone. So the price you pay is the price you pay, not then based upon what view you get and all this jazz. That's gone now. But what is just surprising, is shocking, because they would rather give you something than lower their price because it devalues their product. New home builders have actually started lowering their prices. I can't believe it. Unbelievable. I thought that would never happen. They were lowering their prices. So now you can get lower prices, lower interest rate, closing cost, and incentives. Incentives. Some of them getting $10,000 in incentives. So you're walking into a house, especially if you're a VA buyer, you're walking into a house with no cost, a lower price than someone who bought a house a few months ago, no lot fees, and $10,000 in upgrades. Wow. My goodness. And the next one is, even though I know some lenders, and I have a friend who's against them, I'm just going to bring it out there. The ARM, the adjustable rate mortgage. They are making their way back. So if you know you're going to be moving in 5 years, 7 years, or before, you can take out a lower interest rate by using an adjustable rate mortgage, especially those of you who really know you're going to be gone in 5 to 7 years, like military, aka using that VA loan. Get that adjustable rate loan. You're going to be selling that house in 3 to 4 years anyway. So at least you've got lower interest rates, which is, of course, saving you money every month. Now, if you stay beyond that, we have to pray that interest rates, when you go for a 30-year loan, when the adjustable rate time is over, is lower. And that way you can save some money. If not, you're going to end up with higher interest rates. That is the gamble that you're taking. And one gamble that you will not take is if you look at some of the other videos I have here on the channel, because I try to put out great information like this every week. And like I said before, great folks like you are reaching out every single day, every single week, looking for answers on the process of buying or selling a home. So you can text, call, or email us, and we will get back with you and help you out. And if you can help me out a little bit, if you see that subscribe button is still red, that means you haven't subscribed. Go ahead and click it today. It'll help a puppy out.